the way an accountant works, the kind of work they do, the type of brain space it takes, similar to attorneys, really. It's the slow twitch muscle, not the fast twitch muscle. As a matter of fact, you don't want your accountant to rush through an analysis. Mm-hmm. So the very work they do requires slowing down. But the client wants speed. So how do you meld those two things?
This is the Asset Protection Show. Expert strategies by attorney John Skabelund.
Welcome to the Asset Protection Show, a podcast dedicated to not only protecting your assets from lawsuits and creditors, but also protecting your legacy. After all, what we do isn't just for ourselves, but to create generational wealth. I'm your host, John Skabelund. Today, you'll discover how realtors and real estate professionals can maximize the tax benefits available to them. I'm excited to introduce to you Brandon Green. He's the co-founder of Alchemy of Money, a nationwide finance and tax strategy firm serving real estate professionals nationwide. I have had the privilege of working with Brandon and his team to help numerous clients. So with that, Brandon, please share the story of why you created Alchemy of Money and what makes it different from other accounting firms.
Sure. Hello, John. Very good to see you, and thank you for having me here on the pod. So, it's interesting. I think, life's journey always has some twists and turns. If you had told me, 10 years ago that I would own an accounting firm, I'd be like, what are you talking about? So I started as a real estate agent and in the Washington, D.C. area, and sold a lot of houses and decided to build a team, and eventually got into the brokerage side and scaled that business to about $60 million in revenue and about 1,000 agents around the Mid-Atlantic area. It was a wonderful ride, and then around 2019, I decided to sell the company and kind of go into a little bit of a personal journey to see what I wanted to do when I grew up. And in that reflection process, I remember that I love the industry, I love people, and I love to help them with their finances. It's something that I became passionate about along the way as I struggled myself as an entrepreneur. I knew how to sell houses, I knew how to build teams, but I didn't necessarily know how to manage taxes or run my business, so I learned the hard way. And I created a company that I wish I would have had when I was growing my real estate business to really help real estate agents and brokers and investors with their taxes, with their bookkeeping. So Alchemy came from a passion and an expertise in a narrow band in this, broad business world around real estate, and we took a bet on it. We're like, we think this is a whole company, John. Like, maybe it's a company just focused on real estate professionals. Turns out it is. And a few years later, we're, rocking and rolling and helping lots of people. We'll do, 1,000 tax returns this season. So it's been really exciting to watch it grow.
That's awesome. And again, I'm very impressed with what you and your co-founder has done with Alchemy of Money. But tell us, why do you find that it's so important that you've niched to the realtors, real estate brokers, this particular area?
So folks in real estate are the epitome of the accidental entrepreneur, right? Generally, people are not getting into either real estate investing or being a real estate agent because they're like, I just love bookkeeping. And you get this too, like, just tell me about asset protection. No, they get into it because they have a desire to help people. They might love the product of real estate. They may be interested in building wealth for themselves. Like, there's a lot of other reasons that they do. And when you get in, you realize shortly after having some success that there's an irony in it, that the more successful you get, generally speaking, the more out of control your finances and your legal and your tax situation becomes. And then at some point, we all have the realization, wow, there's a bunch of stuff in this other area that I didn't really sign up for that I need to become more proficient at.
Right.
And I do think real estate entrepreneurs have a bit of a unique journey, even in the context of small business entrepreneurs, because there's so many unique areas of tax law, incidentally, for real estate agents that don't apply to other places. So you just get a lot of folks who have a lot of sales success, but are struggling from a business perspective. And we felt that, to have the depth of experience we wanted to focus in on that niche.
Makes sense. So that kind of raises the question, though, Brandon. So what are some unique tax challenges or issues or advantages that real estate professionals have that your mom and pop store doesn't necessarily?
Yeah, so I constantly get the inquiry from potential members who are like, "Hey, I just want to pay nothing in taxes, like those billionaires," right? I was like, well, there are strategies for billionaires, but let's talk about a strategy for you.
Right.
And what they quickly realize is there are actually a lot of great opportunities to save on your taxes if you are a business owner, and even more so if you own real estate, right? The tax code, like it or not, is written to the extreme advantage of asset owners, be that an asset of your business or a rental property or both. As an example that we might all sort of generally know is tax deductions, right? If you're a business owner, you have the ability to reduce your taxable income by applying various expenses that are relative to running your business towards that taxable income and reducing it. If you're a W-2 employee, you don't have that opportunity. So, the entire structure is designed to incentivize them. And I'll tell you, one of the biggest, if I may, one of the biggest mistakes I see people make in this space is wanting to deploy fancy tax strategies without having the underlying bookkeeping to inform that perspective. So we had a member call us the other day who was like, I want to do cost segregation on my rental property. And if you're listening, you may or may not know, cost segregation gives you an opportunity to essentially do a study on your rental property, and it breaks up all the pieces and parts and allows you to move tax deductions you might have over a period of time into the present or into the near present. So you get tax deductions today, which most people would like to have. But what they realized in talking to them were a couple things. One is they had no record keeping on the property. So there wasn't good financial data. But the other thing they realized is their income was likely to go up. So they didn't want to take the tax deductions today. They wanted them tomorrow. So at a first glance, you're like, well, let's just do a cost segregation study to lower my taxes. But then you dive in a little bit deeper and you're like, do you have the financial bookkeeping to inform that study? And what is your plan actually financially? And in this case, they were going to have a big windfall the following year. So we're like, wait. You're going to benefit more by having that deduction later. So, to your question, a cost segregation study is one of those great levers that gets pulled. But like all tax strategies, there needs to be some underlying data to support the initiative. And that's where a lot of folks sort of underestimate the investment.
No, that's very helpful. What I like about you, Brandon, is I admire those that come outside of an industry and try to disrupt it in a new and improved way. And so you don't obviously come from a tried and true accounting background. So how has that helped you and your co-founder, who does certainly, how has that helped you disrupt this traditional accounting practice?
That's a good question, John. So you're right. I'm not a CPA. I don't have an accounting. I don't even have a degree at all. I'm an entrepreneur. And so when I looked at launching an accounting firm, I came at it from the perspective of great customer service, of how do you properly align a product market fit, like some of these entrepreneurial concepts. Of course, I have hired amazing CPAs and bookkeepers and have built an incredible team of experts in the arena. But our first approach was sort of like white space, like what's the best way it could or should be done? And what I discovered pretty quickly is there's usually a pretty tense at best relationship between entrepreneurs and their accountants, in part because they're just really two different beasts. I mean, the way they think about risk and reward and work, like, it's very, very different. So there's an inherent communication gap just based on people's natural skills and behavioral styles. So we thought, well, let's see if we can solve the communication cadence issue first. As an example, and I think a lot of people listening might have experienced this, that you email your accountant and it takes 2 or 3 weeks sometimes for them to get back to you because they're, deep in tax returns, or for whatever reason. Entrepreneurs don't even remember an email they sent 2 or 3 weeks ago, maybe not even yesterday. So they're looking for a response today. So we had to build a lot of technology, systems, protocols, and new expectations for our finance team around how quickly you get back to entrepreneurs, even if the answer is, hey, got your email. That looks like a big project. I'll have to get to it next week, but I wanted to let you know I got it, and I'll be looking into it. Even that is better than waiting 3 weeks to do it. So that's an example, John, of how we approach the business from an entrepreneurial sense, a service sense, like an experience sense, and have been backing it up with the technical expertise.
No, that's great. And I was just thinking as you were talking that the 2 complaints, first and foremost, would be competence, that I hear my clients grumbling about their tax professional. But second, and right behind that, is responsiveness. I can't tell you how many times I've had clients saying, hey, who do you recommend? My CPA has disappeared. They've gone AWOL. So that's great that you guys have hit the nail on the head there.
And I see why that happens now. Like when I first came into the business, I was like, well, why aren't people getting back to it? Like that seems like super elementary. And on one hand it is, but on the other hand, the way an accountant works, the kind of work they do, the type of brain space it takes, similar to attorneys, really, it's the slow twitch muscle, not the fast twitch muscle. As a matter of fact, you don't want your accountant to rush through an analysis. Mm-hmm. So the very work they do requires slowing down. So, but the client wants speed. So how do you meld those 2 things? We're not perfect. Like, we work on this every day. It's part of our constant cadence with our team and our clients to make sure that we're hitting that right. But I want to speak to the other one you mentioned, which is expertise. Tax is very broad and very complicated. It's similar to law. Like, you could certainly go to a generalist, and they're going to generally know a little bit about a lot of stuff. But when it comes to real estate, if you want to really maximize the opportunities, they're pretty hidden in the tax code, or they require a very nuanced understanding of them, which as a generalist, I don't know that you would have the time or the ability to do that, let alone the comfort level to deploy a strategy that is relatively complex. So, I mean, in general, John, I'm a believer in expertise versus generalist across the board. I think that's a better way, usually, to get a higher level of performance and result.
I completely agree. I really think it's that 10,000-hour rule, right? In order for you to really know your craft well, you just got to focus on that. And that's why I completely agree with you. You need to choose professionals who specialize in what you need. You wouldn't go to a podiatrist for brain surgery, right? It's just not going to be a good fit.
In medicine, we don't do this, right? I mean, you have your general practitioner, of course, but you see how quickly they refer you to a specialist.
Exactly.
They're like, that all sounds strange. Let's get you over to a pulmonologist, right? So they're sort of like triangulating your issues, and whoop, off you go to a specialist in a heartbeat. So I think it's certainly the same in finance and legal and many other areas. To a point. I guess some people can manage with generalists, but if you're going to be a successful entrepreneur, you're going to have a net worth of, several $1 million or more. Like, you've got to have the specialists.
I couldn't agree more. That's awesome. So you mentioned just one of your favorite tools there with the cost segregation analysis, but why don't you tell broadly, what are some of the favorite tools, or what does Alchemy of Money do for a client?
Yeah. So I've got a little list here. A couple other I just want to touch on for your listeners. One is making sure you meet once a year with your tax strategist, period. Maybe more often than that, depending on how much you've got going on, and review your entity structure. We have had a lot of folks come in. I'll give you an example. Like, in most cases, and this is an asterisk here, like, don't take my podcast as tax advice. You need to talk to your tax professional about this. But in general, it's not a good idea to own real estate you're going to hold in an S corporation. You generally don't want to do that. And so, but we see a lot of people who do, right? And so having the right entity structure makes a huge difference in your tax situation. Whether you're going to own it as an S corp, a C corp, a sole proprietor, single member LLC, a partnership, like you've got to have that consultation with tax and legal to make sure that's in the right spot. So big opportunities and big misses in entity structure. The next one is sort of a tactical one, which is we find that a lot of people get to the end of the year and they could put more money into another rental property. They could max out their IRA or 401k. They could pay their kids a salary and reduce their taxes, but they ran out of liquidity to do so. So the thing about taxes to understand is it's this or that. In that I mean the IRS says, look, you can either give us the money or you can buy an asset for yourself and reduce your taxes. You're going to owe the money either way.
Right.
So they get to the end of the year and they're like, I don't have the cash to. I was like, well, that's a challenge because timing-wise, you have to buy the asset this year or you have to pay the taxes next year. So the IRS, because of how the timing of tax return filings work, inevitably gives you a few more months to pay that bill, but the benefit has to be paid early. So whether you are executing a strategy around maximizing a 401k or IRA, any of that stuff requires cash. And you've got to actually be able to do that. Let me give you one more real quick. 1031 exchanges are really nice. A 1031 exchange does allow you to sell a piece of investment property and trade up into something else. But to do it, you have to follow very strict guidelines and timelines. In a mistake I see people make two mistakes in this arena. One is not realizing how much time you have, and it's not much, to find and acquire a new asset to facilitate a 1031 exchange. The other issue I've seen people make, John, which is a little less obvious, is selling an asset and buying a poorly performing asset in order to execute the 1031 exchange and not pay the tax. Remember, the name of the game here is you're trying to build wealth. It's not just about avoiding taxes. So we ran the numbers for somebody recently and we were like, look, the asset that you bought sucks. You would have been better off to pay the tax on the previous asset than acquire this asset that now is a disaster and you're going to have to back yourself out of it. So while 1031 exchanges are great tools, they need to, like all tools, be evaluated in the context of the project, which is what are we really building here? And often, in part because the timeframes are so tight to deploy 1031 exchange, people will just be like, I'm doing a 1031 exchange to avoid the taxes. But then they reverse their net worth by buying a poor asset. So lesser known, but I don't know if you've seen anything like that, but that we've run into that more and more lately in this like rush to get a great asset, and they don't.
Oh, absolutely. It's the classic, the tail is wagging the dog. We've lost focus on why we're even doing it. And so I couldn't agree with you more. What are some other mistakes that you see real estate professionals, such as realtors and real estate brokers, make?
I've got several more. Look, we have all seen a great tax strategy on TikTok, or we've heard from a friend that they're doing X, Y, Z. A mistake people make is they just then go do that, and they don't actually talk to a professional about the implications of that. So one that's kind of popular right now is paying your kids a salary in order to receive some sort of tax benefit. For some business owners, it's actually a fantastic way to reduce your taxes and also fund money over to your kids, which if you then put that money into an IRA, like you can really build for them. But it's actually relatively complex administratively. If you don't do it correctly and you just pay your kids without putting them on payroll and properly allocating the payroll taxes, then about a year after you do that, you're going to get some notices from the federal and state government about a payroll problem. And you're going to own a lot of money and a lot of fees associated with it. So you hear like on TikTok, pay your kids a salary, you can take a tax deduction. And people are like, well, I'm just going to start doing that. But it's actually administratively and compliance-wise a relatively complicated strategy that takes a lot of lift admin-wise. So the mistake we see people make is they want the benefit but don't want to do the compliance work. And, the compliance work takes money and time. So you don't get one without the other.
Right.
Right? So that's a pretty big one that we'll see. I think another one that's interesting is as your net worth and your business is growing, you do need to adjust your payroll withholdings, your tax withholdings, kind of along the ride with it. So whether your income's going up or down, if it's taking a substantial increase or decrease, your situation can change a lot. So we've seen a lot of people have a great year, and then they get to tax season and they have a huge bill. Whereas if they had had a conversation 6 to 10 months prior, we could have mitigated that. So whether, it's swinging up or swinging down, anytime you have these big decisions, coming back and having your tax professional rerun the math to either take away or deploy some additional tax strategies is critical, so you don't get that big surprise come March, April, May, or June where your CPA is like, hey, you have another 30 grand lying around this afternoon because you got to throw that into the bucket today, right? You're like, right? So that lack of pre-planning can be a pretty big one.
No, I appreciate you sharing those. On my side, the compliance issue, I could not agree with more, Brandon. The problem I see a lot of clients have when they're paying their own children is that they often don't have an agreement with their operating company.
Yes.
And just like you're defending them against the IRS audit, right? And we're wanting to make sure all the I's have been dotted, T's are crossed. Legally, we got to make sure that we're not commingling funds between entities and just moving money without a contract, right? So absolutely agree. Yeah.
Yes, you've got to paper that stuff. And the IRS knows if you paper it in hindsight in 2 hours before the appointment with the auditor. The metadata, so yeah, that papering of things. Look, the truth is, you do get to the place where finance and legal is a little complicated. And you do have to allocate a certain amount of money to those two things. The good news, though, is if you do that, the net result is better. But you do have to make those investments in the complexity of things as your enterprise grows.
Speaking of investments and complexity, let's touch on something you talked about briefly there, and that is bookkeeping. Why is bookkeeping so important, and how do you think clients should know when they should hire out their bookkeeping to a professional?
Well, to answer the second question first, if you're making more than $150,000 a year, you probably need to have an outsourced bookkeeper to help you, even very part-time. The way I describe bookkeeping is, if you think about it for a minute, you're just going about your regular day. You're creating possibly 2 to 3 dozen points of financial data in your normal day. Right? Before this conversation, I was just over at the cafe and I had grabbed myself a little coffee and a little sandwich, right? And I came in and made a quick Amazon order. And so in 30 minutes, I had 2 transactions, but it's not just 2 transactions. It's 3 transactions within those 2 transactions. It's the amount, it's who I paid it to, the date, actually 4, and what category it goes in. So within a day or 2 or 3, or even 2 or 3 weeks, you can literally have hundreds of data points around your financial activity that have flown in and out of your bank account. All of that has to be organized in some manner, which is called your books, so that you can report to the government at the end of the year what you spent your money on, how much you spent, to whom you gave it to, and when. If you don't have that good record keeping in the form of a set of books and a profit and loss statement and a balance sheet, which is taking all that activity I just told you about and puts a structure around it, Then when you go to either respond to an audit or go get a loan from a bank, the folks that are your creditors or investors are going to say, I don't know what you've done with all your money, so I'm not going to lend to you, or we're going to penalize you for not having good record keeping. So it gets away from you very, very fast because you have dozens of transactions a day, hundreds of transactions a week, thousands of transactions a month, tens of thousands of transactions a year. It's a rolling engine that never stops. So the sooner you get a hold of your bookkeeping, the better. And about at 150,000, you've got to graduate out of your spreadsheet, and you've got to move to some sort of software-based program like QuickBooks or Xero or something. If you're at $250,000 and you don't have an outsourced bookkeeper, you're either really risking your financial situation or you're just wasting a lot of time trying to do it yourself. So it's a risk mitigation issue, John, but it's also an opportunity advancement issue. Anybody who's listening who's gone to the bank to try to get a loan for an investment property, the bank wants that detail. And that's what the bookkeeping is there to provide to you.
That's great. Well, in the time that we have remaining here, let me ask you another question about any current changes in the tax law that you think the audience should be aware of.
Yeah, so the big bill that was passed, not too long ago, didn't change as many things as it did renew a lot of stuff that had expired. So accelerated depreciation, for example, on rental properties, which had pretty well gone away, has fully come back. Some of the thresholds for how much you can deduct on different line items or how much you can invest have adjusted up. There was no wholesale major structural change per se. It just continued to push forward the incentives for asset owners and made them bigger. So the opportunity became larger, essentially, for folks that have assets to deduct even more because the limits went up and a lot of stuff that had expired came rolling back. So, that's the good news for folks that are asset-based folks with, rental properties or businesses is you've got just a lot more capacity. Similar set of options as you've had for a while, just a lot more capacity on each one of those options. Which actually brings me to a point, John, that I think is relevant here as we close up soon. My final mistake that I've been really harping on a little bit this time of year is not actually understanding what's happening on your tax return. So we've all gotten the tax return from our CPA and we're like, I hope it's right. And you just sign it, right? But the IRS, when they're coming to look for you, they come to look for you, not your CPA. So if you take nothing else out of this pod today, please, when your tax return is done, have a meeting with your CPA and have them walk you through it. You don't have to be an expert on it, but spend 15 to 20 minutes understanding the picture you are about to convey about your finances to the federal and state authorities. That's a reasonable thing to do versus like, I don't know, it's 300 pages long. Who knows what's going on in there? That's not acceptable. We really have to take responsibility because the IRS holds you responsible for your financial situation. And if you do this 10 to 20 minute review every year with your CPA of your tax return, after 3 or 4 years of doing that, you really can get a handle on it without being a CPA. It's really beneficial. So I just want to put a plug in there. Don't just sign and send. Let the CPA say, walk me through it, or do a little video or something, 10 to 20 minutes, because as the citizen, I am conveying to the government my financial picture. I want to know what I'm saying so that it's accurate and that if there are issues, I generally know how to address them. So another level of responsibility, John.
I like that. Well, how can people learn more about you and Alchemy of Money, and tell us a little bit more about your practice? You obviously have CPAs and you're nationwide. How can my audience reach out to you?
The best way is on our website. If you go to alchemyofmoney.co, alchemyofmoney.co. You can see what we're up to. So the bookkeeping, tax services, payroll services for real estate professionals nationwide. And you can book a call on that website. If this is something that is interesting to you, you can learn a little bit more about the services that we're offering in more detail. That's the best way to reach us, is just go right to the website.
That's great. Really appreciate your time today. So in conclusion, just as I protect your assets from lawsuits, your tax advisor should protect your money from the IRS. It's critical that your tax professional understands the unique challenges you face. And I'm grateful that I can work as a team with my client's tax advisor, who's not only competent in saving the client income taxes, but also a team player in recognizing that asset protection and tax strategy go hand in hand. And Brandon, that's why I've appreciated always working with you and your team. You guys are fantastic about that.
Thank you,
So with
John.
that, we'll wrap up today's episode. Thank you so much for joining me. My goal with this podcast is to give you great, actionable content that empowers you to protect the assets you've worked so hard to build. To help me do that, I'd love to hear from you. What topics are on your mind? Are there specific strategies or legal questions you'd like me to cover? Please leave a comment. Let me know. If you found today's information helpful and valuable, please consider sharing this with a friend. Word of mouth is a great way to grow the show. And if you have time, please leave a comment or rating. It really helps the podcast. So thank you again for listening. Until next time, stay protected.
You've been listening to the Asset Protection Show, expert strategies by attorney John Skabelund. For more information, go to assetprotectionshow.com.
This content is legal information only and not legal advice. Listening to this content does not create an attorney-client relationship. Mr. Skabelund is admitted to practice law in Arizona, and he may be reached at ultimateassetprotection.com.